Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in tonight's free video I wanted to review a couple of the stocks that I've been following via the NASDAQ. So we're starting off with the Qs, the SPDR ETF for the overall index, and a couple of things that I'm looking at. We'll adjust this trend line here real quick. But it's a little bit contrarian, and it's something that I cannot tell you is going to fit the appetite for every person that you're looking at. You know, as we look at levels like this, okay, maybe it's exceeded your trend line a bit, but I'm simply looking at the idea that the Qs have not made this new high, and over the course of the next 2 days into the employment data, could we trade sideways to lower? Now, of course, if we keep pushing higher, these strategies won't work out, and it may not be something that you want to pursue. But the big thing for me is I cannot tell you to come up here and buy. So, I can't give that type of advice. If you want to buy this, then I would probably just step aside and not do anything, at least as far as this is concerned. If you're looking to try to get into places where you can get into nice risk-reward setups and look for that reversion to the mean, this is the type of thing that I've been looking at. If we come over and look at the Qs, now granted this would be selling these 110 calls a tiny bit in the money, but I've really liked looking at these unbalanced butterflies where, in the case of the Qs, I'm going to do this 2 strikes wide to set ourselves up on the exact dollar strikes. But with something like this, if you could get filled at a 25 cent credit, you're only having to risk 75 cents, and the best part about it is that if it trades sideways, this will still be a lucrative trade. If it trades lower on the reversion to the mean, you'll take in the 23 cent credit, and then of course if it continues to rally, you'll have to acknowledge your risk. Another place that I think that this is a attractive short-term strategy is in Netflix. Kind of the same concept. Is this something that is a bearish chart? Absolutely not. Could you vouch for the idea that maybe the 200-day moving average will hold as resistance and we could see a pullback down into these levels? Well, if that's the way you're thinking, then I would do the exact same thing. A little bit tough right here in Netflix as we trade 102.5. I would prefer to see us trading 104.5, and then what I would do is set this up directly against the short 105 calls. So if we bring up Netflix here, and you'll notice that trying to do it right here against 103 is not all that attractive, but if you step out into maybe these monthlies, notice the open interest that you'll see revolve around the 105, 100, etc. If we were able to pop up in Netflix on either Wednesday or Thursday, I think that would be a great opportunity to put a trade like this on, where I will usually start off, and I'll start off a dollar wide and then kind of break them down as I go. And I want to make sure that I can still take in a credit on these. In this particular instance, if I go out 17 days, I still get the credit, but I'd prefer to do them a little bit shorter. So if we go into the next week, you'll notice this particular strikes aren't traded. Those that expire this week doesn't yield a credit, so I would skip out on that. But if it popped up into 105, I think that would be an attractive trade then, and that's where I would look at it from that point of view. Another one that will illustrate, at least off to a good start. Now I'm kind of playing with fire a little bit on this one, admittedly, and if Facebook comes up and takes out these previous highs, well then I'll have to get out of the position or modify it through the sale of puts. But as of now, I think it's kind of an interesting pattern to work the idea that maybe we don't just explode higher this week. Over the course of the next 2 days, we trade sideways to lower, and you can apply those exact same strategies using them like we've done here and any of the previous 2 examples off the exact same logic. So if you're looking for ways to benefit off of short-term spreads, 2 and 3 days trying to collect premium in somewhat of a low premium environment, that's one of the better ways I have found to do it. Now John will also have several different strategies that he likes to use for this, and he's especially good at really being precise with these types of short-term trades when that's what he's looking for. So if this kind of stuff interests you and you're looking for more of this type of analysis and kind of precision-based setups, I think next Tuesday's webinar will be of a great benefit to you. So check that out. That's going to be next Tuesday, June the 7th. Of course, this week will be a little odd with Tuesday being the first day of the trading week. So that is 7 days from today. And if you'd like to find more about this, I think that'll be a great webinar, and I'd love to see you guys there. So have a great rest of your night, and I will see you at the next free video.